Hello and welcome. Thank you for joining us on Business Incorporated. I'm Chimeze Obi Iwago. Coming up on the show, Ghana launches world's first digital finance policy amid COVID-19. Kenya bows to IMF pressure on public debt disclosure. And McKinsey foresees bright prospect for insurance sector in Nigeria and other African countries. We begin the show with intraday market numbers from Africa, which were mostly positive, except Nigeria's main index, which was down marginally 0.02%. In South Africa, the JSA index rose 0.56%. Elsewhere in the region, Egypt's main index was also positive at intraday by 0.64%. Kenya closed positive on Friday. And investors in the Middle East started their trading week on Sunday. However, posted positive sentiments today at intraday as all the markets we track were in the green. In the UAE, the Abu Dhabi index jumped to 1.19%, while Dubai's main index rose 0.91%. Elsewhere, the Qatari index was the second highest gainer at intraday by 1.9%, while Saudi Arabia's market was up 0.29%. All right, Britain's financial watchdog has just issued a warning to consumers tempted by the promise of high returns from investing in cryptocurrencies such as Bitcoin. You might lose all your money. Well, Juliana once told me she isn't thinking of investing in that market. Neither do I. So I guess we are safe. Juliana, well, Bitcoin fell as much as by about $7,000 this morning. What should we do? Buy into it? Like Laddie would always say, even though the FCA is warning consumers to beware.
Yeah, I definitely prefer hard cash, Chimeze, and I prefer it in my pocket. And, you know, that's
Absolutely.
really what the FCA, the Financial Conduct Authority, the city watchdog, are saying to consumers. They say, you know, invest at your own risk. And if you do invest, don't expect any protection from us. And, you know, we discussed this, didn't we, last week on your show. It had a record high. Bitcoin, which is kind of the poster figure, the poster child for cryptocurrencies. It jumped more than 50%, passing that record-breaking $40,000. You said it fell about $7,000. I've got it marked here at about $35,000. And it has become increasingly popular over the past couple of months. A lot of investors are seeing it as a haven, so they're putting their money there whilst equities markets fluctuate, going up, down, left and right. And the media, I've got to tell you, especially in the UK, they said the media are playing a pretty irresponsible role about how they're selling cryptocurrencies. So the FCA just wanted to put that message out there. There's a quote here. They said the FCA is aware that some firms are offering investments in crypto assets or lending or investments linked to crypto assets that promise high returns. Investing in these assets generally involves taking very high risks. If consumers invest in these products, they should be prepared to lose all their money. But of course, that's what the watchdog is saying. I've spoken to several people in the industry. I know you have. Some are seeing this as the way forward. They're seeing this as the future. And many people have invested in it and they haven't had these negative yields. But of course, you know, if you're somebody who wants to get rich quick, I don't think digital currencies are the best way forward. So yes, I'm keeping my $30,000 in my pocket. Chime.
Yes, well, it looks like it's not just Bitcoin that is taking a hit today. The FTSE 100 share index has opened lower in the morning. What's the intraday update and who are the drivers?
For the first trading day of the week. The FTSE started off in the red and at intraday it's still in the red. The all share is down 0.26%. The FTSE 100 is down 0.33% and the FTSE 250, the domestic market, is down 0.03%. In the currencies market, the British pound is down against the US dollar by 0.50%, down against the euro by 0.02% and down against the Japanese yen by 0.34%. 5%. Worth mentioning, Chimeze, that there are strong rumours coming in to me from sources that the British government are thinking of making these lockdown restrictions even more draconian. There is going to be a Downing Street press conference delivered by the Health Secretary, Matt Hancock. COVID is raging out of control here in the UK at the moment. Yesterday, I believe there were over 564 deaths, another 55,000 people confirmed positive. We are in a third national lockdown, but there are suggestions that we could be getting a bit more stricter, no exercise or only exercising by yourself. Churches will close. There will be an overnight curfew. So that's the sentiment of the traders at intraday.
Okay, and retail chain JD Sports has shrugged off the pandemic and hiked its profit forecast there despite shutting many of its stores during lockdowns. What's fueling this optimism?
Goodness me, if I knew, I'd probably be the CEO, Chimeze. But look, let me tell you, JD Sports are doing exceptionally well. They are a sports retailer, pretty popular with 18 to 24-year-olds, those who are still living with their parents and have got extra cash to splash on swanky trainers and tracksuits. I think for all retailers, they have said that, of course, because people aren't going out, people aren't spending on really flashy dresses, but they are spending on loungewear, and JD Sports are reaping the benefits of that. They've given their trading update this morning, and in the 22 weeks to the start of January, their sales were up by 5%. In fact, they were up 5% higher than they were this time last year. Even though they went through the November and December lockdown, they've also updated their profit forecast over the next financial year. It was pegged to £295 million. They've increased that to £400 million. So they're doing pretty well. Their shares, as soon as they announced that trade report, were up by 4%. So there are some retailers here in the UK that are bucking the negative trend that we're seeing throughout the high street, Chimney.
All right, thanks, Juliana. Enjoy the rest of the day, and let's keep tracking those developments out there in London. And European stocks were slightly lower this morning following the trend set by their Asian counterparts overnight. I have Conrad there at the Frankfurt Stock Exchange. Hello, Conrad. Good to see you and Happy New Year to you.
Happy New Year, and thanks for having me back on Channels TV. Hi, Nigeria.
Hi, Frankfurt. Okay, the week on the European stock markets has started somewhat hesitantly. Indices like the German DAX are trading below their recent highs. The earnings season is ahead. How worried are investors that expectations were too high?
Well, of course, the worries are everywhere because this pandemic is unprecedented. Any kind of forecast is highly speculative. And given that we've seen a few record highs in the course of last week, of course, many people on the trading floors are discussing, well, are we seeing a bubble right now, or have we seen a bubble? This huge increase of equity prices, not only here in Germany, but in many other markets as well. Has this the quality of a bubble? At least in terms of valuations, I can tell you that here in Germany, the valuations are not as high as they were in the past. You know, when other bubbles burst and when huge sell-offs started, the price-earnings ratio for the shares of the German share index DAX is slightly below 20, and that's really not a level that experts and market people really consider to be overblown. That said, of course, everyone is aware that what's been driving the huge demand on the equity markets are extraordinary factors, the extraordinarily generous monetary policy, the emergency spending by the governments worldwide, including our government here in Germany. Of course, one has to wonder what happens when those extra measures, this extra support for the markets, will slightly be withdrawn, slightly phased out when, you know, the pandemic subsides.
Germany's car maker Daimler reports about a shortage of computer chips slowing down production. What's going on? Has the pandemic hit semiconductors as well?
Yes, that's playing into this as well. We have to keep in mind that for many years, the chip makers have been very hesitant to, invest in their production lines. Also because profit margins for many years have been very slim. Now, the pandemic, which has accelerated this huge shift towards, digital products, digital applications, this has caused a huge increase in demand for computer chips. Now, on the other side, on the other hand, the car makers for many years have put a lot of pressure on their suppliers. And in terms of the chip makers, they have constantly tried to negotiate down the prices they have to pay for computer chips. And now, as a consequence, the computer chip makers are more willing to serve, more generous, more friendly, maybe more easy to handle customers before they serve the car makers.
Everyone's talking about the political events in Washington. What about the political risk in Germany? Chancellor Angela Merkel will not stand for another re-election this autumn. And this week, her Conservative Party will vote for a new party chief. How smoothly is this transition going?
Well, at least much, much, much more smoothly than the transition of power in Washington. And I have to say, this discussion in the run-up of this party election has been relatively calm and very, very civilized, which probably also has to do with the pandemic. The focus of policymakers, of the press, of citizens here in Germany has been so much to everything COVID-related. The discussion about the succession of Angela Merkel has been pushed in the background a little bit, which is likely to change because we have 9 elections ahead this year here in Germany, including the general election for the German Federal Parliament. And of course, the question what direction Germany's largest political party, the Conservatives, will take will be central in those elections. Of the 3 men who are, candidates to succeed Angela Merkel, one is considered a bit more to the right and also a bit more populist. The 2 others are expected to more or less follow in the footsteps of Angela Merkel with her rather centrist policies. Of course, none of those men have the political profile and the political weight of Angela Merkel, at least not yet.
All right, thank you, Conrad, for those updates. Well, the week has just started, and I'm sure you'll keep bringing us up to speed with developments out there. Enjoy the rest of the day. And in Asia, markets dipped today with South Korean stocks hitting a pause following a stellar start of 2021. South Korea's Kospi which jumped nearly 10% in the first trading week of the year, shared earlier gains seen during the session and closed 0.12% lower. Mainland Chinese stocks fell on the day. The Shanghai Composite declined 1.08%, while the Shenzhen Component shared 1.33%. Elsewhere, Hong Kong's Hang Seng Index was above the flat line as of its final hour of trading, while the S&P ASX 200 in Australia declined 0.90% to close at 6,697 points. Markets in Japan are closed today for a holiday. And stock futures in the U.S. fell early morning trade as investors assessed the outlook for more COVID-19 relief stimulus. Futures on the Dow Jones Industrial Average fell 128 points. S&P 500 futures and Nasdaq 100 futures both traded in negative territory. The stock market is coming off a solid week to start 2021 as investors look past the violent siege of the Capitol and focused on the prospect for additional fiscal stimulus after a Democratic sweep of Congress. The S&P 500 climbed for 4 days straight to a record with a 1.8% gain last week. The Dow and the tech-heavy Nasdaq Composite gained 1.6% and 2.4% in the prior week each, also reaching all-time highs. And on global oil market, prices fell in early trade today on renewed concerns about global fuel demand amid strict coronavirus lockdowns in Europe and new movement restrictions in China after a jump in cases there. Brent crude oil futures fell 0.8% to $55.57 a barrel, while U.S. West Texas Intermediate slipped 0.4% to $52.02 a barrel. Mainland China saw its biggest daily increase in COVID-19 COVID-19 cases in more than 5 months as new infections in Hebei province, which surrounds the capital, Beijing, continue to rise. And with COVID-19 vaccines being rolled out in some countries, where does the African continent stand? That's next, after the break. With promising results from 3 major COVID-19 vaccine trials and potentially more to come, and the recent rollouts in some countries, it's becoming clear that access to coronavirus vaccines will soon become a reality. But despite unprecedented global push to ensure access for low and middle-income countries, the majority of available vaccine doses have been earmarked for wealthy countries that have the political and financial capital to make direct agreements with pharmaceutical companies. Where does this leave the African continent? An associate practice lead at Frontier View, Matt Kiniger, joins us now. Hello, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the show today.
So tell me, which African countries have made progress for you? You cover sub-Saharan Africa. Which African countries have made progress so far in procuring supplies of COVID-19 vaccines?
Yeah, so the process of procuring vaccines has gathered pace over the last couple of weeks. So very notably since the beginning of the new year, there have been some announcements by South Africa that they will be procuring doses from AstraZeneca. Nigeria says it expects, it has released plans for over 40 million doses over the course of the next few months. But overall, the status of procurement has been quite weak so far. And this is likely because most African countries have actually had a fairly quiet pandemic in terms of the number of deaths. So there hasn't been as much political pressure for countries to get COVID vaccines. But this is beginning to change as the region is starting to see a second wave of infections. In terms of procurement, we're likely to see COVAX, the initiative that's led by the World Health Organization, playing a much greater role in terms of the procurement of vaccines over the next few months.
Now, which vaccines are likely to be used in Africa, and when will they be available on a mass scale?
Yeah, so we've seen a large number of vaccines being approved in Europe and North America over the last month or so. In the end, it's likely to be a mix for sub-Saharan Africa. The Chinese have been touted as being a major player, but in the end, it's likely to be quite a selection of vaccines that make their way to sub-Saharan Africa. Moderna, AstraZeneca have said that there's unlikely to be mass availability, and the Pfizer BioNTech vaccine is unlikely to be a starter in sub-Saharan Africa because it requires such cold temperatures to be stored and transported. So it's probably going to be a bit of a mix, really, across sub-Saharan Africa. In terms of when we expect things to be available on a mass scale, it's probably not going to be until of 2021, but even then, mass vaccinations will take a very long time across sub-Saharan Africa.
All right, so what will the economic consequences be for African countries if vaccine rollout is slow over the course of 2021?
Yeah, so initially we were thinking that a delay in vaccine rollout or slow vaccine rollout across sub-Saharan Africa would not really be much of a problem because of the low death rates in sub-Saharan Africa. But this is beginning to change in terms of, we're seeing very high increases in cases across the region. We're likely to see governments potentially forced into introducing stricter lockdown measures, which will have an economic fallout for sure across the region. And this will affect labor-intensive industries like manufacturing and agriculture. We are also likely to see more pressure on government finances because there will be a need to divert finances or public finances towards healthcare systems. And so this could have an effect on government's fiscal positions as well. There really are quite a few industries, as well as tourism that I haven't mentioned as well, actually, that'll really be negatively affected by delays in rolling out vaccines across sub-Saharan Africa. So certainly it will have an effect.
All right, thank you very much, Matt. It's always a pleasure having you on the program.
Thanks very much.
And Ghana has launched a digital financial services policy, which the government hopes will support various measures it is taking to leverage DFS in its COVID-19 response. The Ghanaian government has removed fees for low-value remittances, relaxed transaction and wallet size limits for mobile money, made known your customer transferable from SIM registrations to allow for remote mobile money account openings, and zero-rated all interoperable transactions made through the interbank switch. While the policy has been years in the making, the country has also committed to allowing beneficiaries of its largest social benefit transfer program to receive their payments via mobile money. These efforts are in line with what is happening in other African countries where a cash-light economy is seen as a key tool to surviving COVID-19 and any future pandemics. And Kenya has bowed to pressure from the International Monetary Fund to include the 3.4 trillion shillings parastatal and county loans as part of the country's national debt. The National Treasury explains that this will be done gradually, beginning with foreign currency debts by parastatals before including loans from private-public partnerships, pension and county government. Currently, the Treasury only recognizes guaranteed debts, but the IMF wants it to include all loans of state-linked firms, the move that will push the country's 7 trillion shilling debt up by 3.4 trillion shillings, crashing through the 9 trillion shilling ceiling set by Parliament. Treasury officials were reluctant to take up these liabilities of debt, claiming if a parastatal had borrowed, it should not be part of public debt. And McKinsey & Company, a global management consultancy services company, has described the insurance sector in Nigeria and some other countries in Africa as one of the world's hot regions for insurance penetration. In a report titled, "Africa's Insurance Market is Set for Takeoff," McKinsey notes that steady economic growth in most countries, combined with a largely underdeveloped insurance sector, have positioned the continent as the second fastest growing region for insurance globally after Latin America. And prior to the impact of COVID-19, the insurance market was expected to grow at compound annual growth rates of 7% per annum between 2020 and 2025, nearly twice as fast as North America, over 3 times that of Europe, and better than Asia's 6%. And Ethiopian Airlines turned to its cargo services to help keep it above ground after a drop in passenger traffic and $190 million in lost revenue due to the coronavirus pandemic. Let's take a listen.
Ethiopian Airlines was converting its passenger planes to cargo in a bid to help the company diversify and overcome a drastic downturn in passenger revenue. Ethiopian Airlines had not cancelled any jet purchases by May despite the collapse in air travel, though several orders, including some from Boeing and Airbus, had been delayed. Engineers were busy transforming the planes.
We have been converting passenger aircraft to cargo aircraft. We have converted 20 of them. It depends on the fleet, but it took 36 hours and less. And this, we have been doing this for the past 2 months.
The airline CEO said demand for cargo had increased mainly due to demand in Europe and America for personal protective equipment and medical supplies to tackle the virus.
The majority are importers of COVID-19 personal protection equipment and medical supplies. And these are located in Africa, in Europe and America, and particularly Europe in the beginning when the COVID-19 spread was very high.
Ethiopian Airlines recorded a loss of $550 million between January and April, but Tewolde ruled out seeking a bailout from the Ethiopian government and remained optimistic.
We are a little bit more optimistic, so we see some kind of maybe 50% recovery in the summer because it's a summer peak, and we see that people are sick and tired of the lockdown.
The global aviation industry has been at a virtual standstill due to the coronavirus pandemic, forcing airlines that were once eager for new jet deliveries to grow their networks to scale back their flying schedules and park planes.
And that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.